The tax man is finally catching up on the crypto market. When Bitcoin was still deeply buried underground in the world of unknown technology and the dark web, it was hardly seen as a threat, or even legitimate by those in power. However, it soon proved many in the mainstream wrong as its popularity and price skyrocketed. Both of these factors have caused regulators and governmental institutions to sit up and take notice. But more than that, they have been forced to take action in response. Regulators are indeed catching up to Bitcoin, as more and more hard-nosed approaches begin to make the news. It now looks as if the taxation authorities of some countries are also starting to get to grips with this fast-moving, and mostly anonymous, monetary system/growing asset. Just like death and taxes. It is hardly confusing as to why the tax man would want to come knocking on the Bitcoin community's door. The power of this digital currency, along with others, has handed huge amounts of growth and prosperity to investors, prosperity that has up till now been largely kept off the grid. The amount of money, growth, and returns on investment mean that there is room for governments to stake their claim, but their methods in doing so are far more difficult in the gray area of crypto earnings. In normal circumstances, banks and other centralized financial institutions are obliged to disclose finances to taxation authorities. However, the same cannot be said for Bitcoin. There is currently no obligation on exchanges to disclose user information. In fact, it is unconstitutional in most settings, as the USA's Internal Revenue Service, IRS, found out when they requested data and were turned down by the courts. Additionally, blockchain offers a transparent window into wallet addresses and transactions, but with anonymous IDs, these are no good to anyone trying to track down the owners of funds and their respective growth. This is also why there is a widely held fear of money laundering in the Bitcoin world. How do they do it from US to Australia? Given the difficulty in pegging down Bitcoin assets, different nations are trying different methods to try and claim tax from profits made by Bitcoin investors. The IRS, for example, has tried asking people nicely to declare their tax, and only 802 listened. The reset merely scoffed and remained in the shadows. In Australia, the government has deemed that cryptocurrencies are a form of property, and therefore, any financial gains made from the selling of Bitcoin will generally be subject to capital gains tax, CGT, and must be reported to the Australian Tax Office, a spokesperson from the tax office said. While this is still a grey area, there has been a warning issued. The Australian Tax Office has warned it will be looking out for telltale signs of crypto tax dodgers living beyond their means. The Australian Tax Office is here to help those that are genuinely trying to meet their tax obligations. However, where people attempt to deliberately avoid these obligations, we will take strong action. This includes using a range of existing powers which are used to address unexplained wealth and conspicuous consumption that may arise through profits derived from cryptocurrency investment. The South African Revenue Services, SARS, said in December last year that it would be exploring ways in which to track cryptocurrency trades in the hopes of addressing tax avoidance. In the meantime, it is looking to provide its own guidance for citizens on the tax treatment of cryptocurrencies, its first foray into controlling the gains made. As Asher Jayawant Ram, senior lecturer in the School of Accountancy at the University of the Witwatersrand, puts it, I think there is enough interest and enough scope for SARS to be looking into this space, but now the question becomes, are they really going to accept taxpayers declaring their gains as capital gains tax, or are they going to just say it is all revenue in nature? Income or capital? This is a key question that a lot of nations will have to put to the sword as, should it be taxed as income, as opposed to capital, it will be at a higher rate. Proving that it was indeed a long-term investment, and thus subject to gains tax, is far more difficult in the fast-moving ecosystem that is Bitcoin. Ram adds. Those sorts of debates on the nature of Bitcoin, I think those are coming, and I think it would be very interesting to actually see the outcome of those debates. It is the very nature of cryptocurrencies that as they emerge more in the mainstream, they will be subjected to more scrutiny and regulations. While blockchain and cryptocurrencies are a disruptive force, scaring long-standing institutions such as banks, it is doubtful that they will be able to avoid tax forever. It would be more pertinent for a resolution to be met between tax authorities and crypto investors, lest there be bigger issues down the line. Formerly top cryptocurrency exchange Huobi to open office in US. Huobi, one of the largest cryptocurrency exchanges that was originally founded in China, has revealed its plans to open an office in San Francisco. The announcement took place during the Blockchain Connect conference Friday, January 26. Blockchain Connect, an event that focused on the cooperation between the US and China's cryptocurrency markets, took place on Friday, January 26 in San Francisco. The Huobi Exchange was one of the presenters at the conference, during which they have announced their intention to start doing business in the United States. The company's new office is already under construction in the Silicon Valley. "The US will be our focus right now," said Huobi's Chief Strategy Officer Cai Kailong. Founded in 2013, Huobi Group provides exchange services in Singapore, Hong Kong, South Korea, Japan, and other countries. The company was forced to leave China, its original jurisdiction, after local regulators demanded all cryptocurrency exchanges to close in September 2017. In December 2017, Huobi announced a partnership with Japan's financial conglomerate SBI Group in order to help the latter launch its own cryptocurrency exchange. To become a blockchain-powered smart city. Taipei, Taiwan is seeking to become a smart city by utilizing the power of distributed ledger technology, DLT, or blockchain. The city has chosen to partner with IOTA, the inventors of the so-called Tangle technology for the Internet of Things, IoT, to provide a number of new technology features for residents. Wei Bin Li, Commissioner of the Department of Information Technology in Taipei City Government, suggested in an official press release that the unique technology offered by IOTA will usher in a new era of smart cities for the citizens of Taipei. The first project on the docket is the creation of citizen ID cards built on the Tangle technology. Called Tangled cards, the creation is designed to eliminate risks of identity theft and voter fraud, while at the same time providing a simple means for tracking health history and other data for government-related services. The company is already working on a side project for the city to create a palm-sized card with sensors that would detect light, temperature, humidity, and pollution. The design is intended to give the citizens of Taipei up-to-date information about pollution levels in real time. IOTA Foundation co-founder David Tinsteb sees the adoption as a massive step forward, noting that the technology is ready for real-world use cases and is more than just a theory. To Facebook cryptocurrency ad ban. Facebook users will no longer be bombarded by cryptocurrency, initial coin offering and Bitcoin adverts on the social media platform. The company has instituted an all-out ban on cryptocurrency, ICO, or Bitcoin adverts, citing financial products and services frequently associated with misleading or deceptive promotional practices. Unfortunately, legitimate financial service providers will also be painted with the same brush, which effectively rules out any advertising of cryptocurrencies or related products on Facebook. Adverts failing to comply will be banned from Facebook and its partner platform Instagram, as well as its advertising platform Audience Network. Facebook's advertising tech director Rob Leathern said the ban was intentionally brought in an effort to weed out deceptive and misleading advertising. Social media reacts. As per usual, a gander at social media timelines provides some interesting reading with varying opinions on the latest development in the cryptocurrency space. Facebook's advertising move was met with varying degrees of skepticism on Twitter. Twitter user Armin van Bitcoin took a subtle dig at Facebook founder Mark Zuckerberg, who recently made positive comments about blockchain technology. 3 weeks ago, I'm interested in learning more about decentralization and how to put the power back into people's hands. Meanwhile, Brian Haggerty said Facebook's move has nothing to do with Bitcoin, while the news has inevitably led to further fear, uncertainty, and doubt. So, more. Everyone panics, as usual. What do any of today's headlines have to do with number Bitcoin? Nothing. Crypto ads has zero to do with Bitcoin. It's why education is vital in this new arena. Omar Bum speculated that the move could net the likes of Google higher advertising revenues, with Facebook refusing to accept cryptocurrency advertising. The good, the bad, and the ugly. Wonder if Google will follow suit, or simply enjoy the higher ad revenue. This surely impacts everyone in the industry. One user said the move presented yet another opportunity for people to buy Bitcoin as the market price reacted to the announcement. Facebook bans cryptocurrency-related ads. Samsung starts producing ASICs. Bitcoin breaks down $10,000. And mainstream media keeps delivering the good old Bitcoin is crashing Bitcoin news. And I'm here buying $BTC. The first tweet is probably the most telling, as it highlights a degree of hypocrisy from Facebook founder Zuckerberg. At the beginning of January, Zuckerberg said he was interested in going deeper and studying the positive and negative aspects of these technologies, and how best to use them in our services. ICO scams advertised on Facebook may have lured gullible investors, and it is right to put a stop to these kinds of practices. But an all-out ban might also punish legitimate businesses that are making pivotal strides in the development of different blockchain applications.